we expect there's going to be a breakout. We're bouncing out of the low boundary of that ending diagonal. Actually, I've already bounced. It's showing here on that daily chart. Alright, and we appear to be about to break out of this inverted head and shoulders. We're having head here and double shoulders. We're about to break out of this to go to 160 and maybe even on the weekly chart 162. Okay, so the bounce that we're looking at is on that 4-hour chart. We have consistent positive momentum on the 4 hours. We're buying into this motive wave on the 4-hour chart. I know it shows an A and a B and it's going to be a C, but the market refuses to go down. We have been monitoring it for over several days now, and we believe that the breakout is imminent. Will be very strong once we have the degree 3 momentum on the 1-hour chart. You're looking for moving to wave 5 at 160. That is that level here, 160, the top of that ending diagonal, if not even higher. Okay, so we would want to investigate the momentum picture on the 1 hour and the 15 minutes is in particular what is leading to these beliefs, because at least one of them is always consistently positive and supported by that 4-hour chart. We have a trigger, of course, on this 4-hour chart. It is still a positive cycle and at the neckline, so we're going to be taking out the neckline once we get some consistent positive momentum out of the 1 hour. Okay, so over here, back into, I believe that was January, we had the same right shoulder formation or left shoulder formation. It failed because there was no strength and momentum on the 4 hours. Now we have strong momentum, so we expect to have trigger and we're no longer going to be doing a second head. What we're seeing now in the market is just that ABC correction into degree 4. This is a wave 4, this is a wave 3 here. We're having a wave 4, and this wave 4 turns out to be, I believe, an ascending triangle or an asymmetric triangle. It's just taking a long time, that's all. So now we want to go live. You can decipher that this is actually the same 4-hour chart, same half momentum chart. Okay, and that is the same wave 4 that we are looking at. Okay, so we had a bounce in wave A, we're going to be doing a wave B. The internal structure is actually correct and is actually bullish. That wave B takes us to the market top. If we continue in the same progression, we're simply doing an ascending triangle below the market. The lower boundary of that ascending triangle is always a buy, and we would expect once we get to do a wave C is going to be very congested, contained in that ascending triangle. The market will probably be moving higher to that 160 level. So we're looking at that 15-minute chart. The shoulder is coming to an end. There's a probability, a potential that it is doing an Elliott structure, an Elliott motive degree 3. It's now supporting on that neckline. You're seeing, of course, heads, and that is your next shoulder level. It will move higher to 157.9 and 157.7 before it continues to do that other shoulder. This would be wave 5. There's going to be a very strong ABC down into that wave 5. This inverted head and shoulder formation and that neckline here is just below the Elliott structure. Once we get to finish this wave 5 and do that ABC, forget about that A now, that B, sorry, you're looking at this kind of formation here. This is an A and a B, and this is finally wave C. This correction is finished because it has gone on longer than expected, so it is already prolonged time-wise. The breakout we believe is imminent, and it is showing on sterling dollar, and therefore we would want to join the market. If you're not already long, we were long at around 156.17, I believe, on a trigger on the 15-minute chart. I hope we'll remember that. We're gonna be doing wave 5 very quickly. This neckline, maybe not very quickly, but shortly, and therefore we'd want to be into the market today or tomorrow. You want to buy 156.3, 156.2. You want to buy a retraction back into that wave 4. That is, I believe, the last time you're going to be seeing probably shoulders, again relating to this head formation. We have a stop at that red dotted line if you're not already in the market. If we are already in the market, we had a stop at 154.4 and 154.6. So our stop is below level 1 here, that internal level 1. We have, of course, supported onto that internal level 154.4 and 154.6. We buy this again and we take it to 160. So we're now at 156.75. Getting in at 156.3 will, I think, hopefully get us to 160, and we even have projections for higher levels. So looking at 160.86, you are on the weekly chart looking at 162. So the entry is very lucrative, very important to be in, because if we break out of that cycle top comes in at 156. This is cycle C here. If we break out of this and we are now at that cycle top, we do 127.2, we are looking at actually 164, not even 162. So the market is a buy today for sterling yen. If you're already long, you would want to hold to at least 160. If you are not long, we are looking at another final correction into wave 4 here to bounce at wave 1. We expect that the current right shoulder is now concluding, because there is consistent neutral momentum on the 15 and 1 hour. There's usually positive momentum on 15 minutes, and there is consistent positive momentum on the 4 hours, so the breakout is imminent. This is just, we could consider it's going to be a breakout higher, and we want to be into the market if it's not really imminent, and therefore we're looking at very close termination of that right shoulder. Our next target level is going to be wave 5. This is the broader picture of what you're seeing now. Okay, so we're looking at the next target level is that wave 5 here, 158, and most probably at that point you're going to have a correction. This is a 5-wave structure contained at the neckline. It would be high degree 1 and high degree 2, and we move on to 160. The bounce at the lower boundary of that leading diagonal or ending diagonal is now almost over and coming to an end. Level B is finished. That level B here is finished. So there was an A and an ABC, that is B, and now you're doing A, B, and we are into 5 swing C. Buys entries are 156.3. Stop is 150. If you want to have a very tight stop, just at that red zone, 155 neat. Or if you're already holding longs, we had a stop at 154.4. We keep it there.